investor homies, it's your boy Kevin from Touchdown Trades, your trading BFF, your stock market bestie. The penny stock market has slowed down. Over the last 6 months or so, it seemed like every single day we had a penny stock making a 1 or 200% move. It has been wild, but it's all about having a catalyst. The hot streak started with the Rhinoceros Rex as investors and traders realized how serious the problem really was. We all started flocking into any biotech that had anything to do with a vaccine or a therapeutic. And next, it was time for the EV penny stocks to make their move. And any company that had anything to do with the EV sector went to the moon. And as all these EV penny stocks started to take off, it made me realize as a person that gas is not cool. So I went out and bought this bad EV truck. It goes 0 to 60 in about 3 seconds, and yeah, I know, it's pretty cool. But that's beside the point. Let's get back to these penny stocks. My point is that even though the market's not that hot right now, there are still some great opportunities to be had. There are still some penny stocks out there that are going to offer us huge return. I've done hours of research, scanning, and due diligence, and I've come across 4 penny stocks that I believe have potential to go to the moon. These, my friends, my trader and investor homies, these are the top 4 penny stocks right now. Let's get it. All right, all my traders and investor homies out there, I got 4 penny stocks for you guys today that I think are all green lights buys right now. The first one we're going to talk about is ticker AMC. AMC Entertainment, you're familiar with the company. If you ever have been to the movie theaters, you have probably been to an AMC movie theater. They are staple in the industry. They've been around in the United States forever, and the stock has taken a beating over the last few years. Just a couple years ago, we were trading above $35 a share, and we have since sold off and are currently trading at just under $6 per share. So why is this company taking a beating? It's pretty evident about what has gone on in the media industry over the last several years as cord cutting has gone into effect, as people have migrated away from cable and have shifted towards a more streaming orientated platform. The movie theaters have taken a big hit. But it's important for companies to know that the consumer is shifting away from their business model and heading towards a different type of business model. And AMC is not stuck in the mud like other companies have been caught doing in the past. Take a company like Kodak, for example, which used to make the cameras that shot out the Polaroid, and they had the saying Kodak moment. That company didn't shift as they wanted to stick with the instant camera. They wanted to stick with the kind of camera that you had to load film into. They didn't switch over to digital cameras until it was too late and they got killed. Take retail, for example. Brick and mortar retail stores didn't shift. Look at Sears. What happened to Sears? Amazon killed Sears. Sears didn't make the transition to online until it was too late and they got killed. This AMC knows that people want to watch movies from their house and they're making the transition that is necessary. If you were a member of the Touchdown Trades swing trading chat room and alert service, you would have known that we caught an awesome trade on this AMC just a few weeks ago where we bought it just over $5 a share and sold it over $7 a share. 2-week free trial in the description down below. But this thing is pulled back. It's gave us a perfect opportunity to get in. We buy the dip, we sell the rip, and it's given us an opportunity to buy the dip. But this go around, I'm looking to invest in this AMC for a longer term position, and I'll tell you guys why. AMC has struck a deal with Universal Studios to offer video on demand services for new release movies, and this is how AMC survives the cord cutting trend. People don't want to go to the movie theaters anymore? Okay, fine, AMC says. We'll offer them the ability to watch these new releases from their home. Families can order new release movies from their couch and watch it on their own TVs. This is huge for the industry, and AMC is the first big movie theater to offer a service like this, and this is going to give them the footing they need to survive in this tough time that they have to get through. They have to recoup some of the losses that they've taken over the last several months as their movie theaters have been shut down, and this has kind of forced them into a corner, and they needed to make the change. So I actually think the Brontosaurus Rex is going to end up benefiting AMC in the long run. This deal they made with Universal to offer this on-demand service is absolutely going to save AMC stock, and I believe it's going to send it to the moon. All right, let's talk about my plan with this AMC. I'm going to start accumulating a position towards $5 per share. Any pullback towards $5 a share, I'm going to be getting long into. I'm going to hold this AMC till at least $8.50, $9 per share. I'm looking for a pretty big move to the upside on this AMC. If we do break below this past $4 support area, I'll reconsider where I stand, but I'm looking at this as a longer term investment. Ticker number 2, HEXO. HEXO Corp is a Mary Jane company based in Canada. I have personally shied away from investing in any Mary Jane stocks, especially penny stocks, because I think the industry is a little bit sketchy right now as the United States gets more used to the idea of the whole country becoming legalized. I think we are headed in that direction in the near future. But this company here is based in Canada, where it is already legal for recreational and medical use. I think the United States we're a few years away from states like Georgia, the southeastern United States, being like, okay, we're gonna legalize this. We're gonna finally realize that the tax benefits outweigh the very few negatives that there are regarding legalizing. This company here is based in Canada, and I really like the growth prospects of this HEXO Corp. We'll take a look at the chart in a second, but let's talk about why I like this company first. I like their targeting. Instead of targeting your big, huge stoners who just sit in an apartment all day and have 5-foot-long bongs and are just all burning all day, they don't have jobs, and they just sit home and watch the Dave Chappelle show all day long and get stoned to the moon, this HEXO Corp is targeting your average dude who is still a functional human being, has a job, is not a complete stoner. So what they're doing is they're selling vape pens at your average convenience stores, and I think the Mary Jane industry gets a bad rap in that not all people who partake are just complete losers and stoners. Me personally, I'm in a state where it's illegal, so I'm not going to talk about whether I partake or not, but I'm a pretty functional dude. I make a good bit of money, and I'm going to say I enjoy the leaf every now and then, if you know what I'm saying. That's besides the point. My point is I like that this HEXO Corp is targeting your average person and not focusing just on selling the buds in like a jar. The guy has to go home and roll it himself and smoke it. I like it that HEXO, you can walk in the gas station, pick up a vape pen, and it's ready to go. You go home to your wife, the kids are at the babysitter's house, and you can just enjoy the vape pen with your wife and have a nice relaxing evening. Also, HEXO is available across all of Canada. Canada is fully legal, so you can go pretty much anywhere in Canada and pick up HEXO's products. They also are now in Israel. They just made their first medical sale to Israel, which is huge news. And as they start to expand, the company is going to grow quicker than expected. They increased their sales 70% quarter over quarter. So I think the growth prospects on this company are very impressive, and I think this company has the potential now to go to the moon. They have the potential to go very, very high. Get it? All right, let's take a look at the chart. I got the weekly chart pulled up here on this HEXO. It's currently trading about 75 cents per share. What I want to do is I want to get long in front of this 50-cent area, which is going to act to support this prior low at about 50 cents. It's going to be my stop. And I'm looking for this thing to break over $1 and head towards $1.30 per share, and then I'll reevaluate and see if I want to take any profit or not. So 50 cents is a stop. I'm looking for the move over $1 towards $2, and then I'm going to reevaluate. We did make a nice move over the last several years, but as Tilrays, the Crons, the CGCs, they kind of sold off. This company sold off with them, but those companies sold off for different reasons. This HEXO is based in Canada. I like the prospects of this company, and I think it has potential to get elevated. Ticker number 3 is going to be this GENE, Genetic Technologies. This is purely a Rhinoceros Rex trade for me. Okay, I do not want to invest in this GENE long term, as I am not a believer in the long-term fundamentals and business model of this company. They came out with a press release a few months ago, right here on this day where it went up like 150%, that they are working on a COVID severity test where you can test a patient and it'll determine how severe the case or the virus may be. I am not a believer in this company's ability to come to market with a test of that nature. However, I do want to be holding a few of these penny stocks in case there's some downturns and there's a spike in the amount of cases and there's an influx of buying back into the vaccine and therapeutic sector. If that happens, this GENE will benefit greatly, and this chart is setting up nicely and offering us a defined risk. Okay, so we have a level here at the like $3 area that we can use to risk off of. So we're only risking about 80 cents. And if news comes into this ticker or the sector gets hot again, this thing has a potential to easily break $5 a share in just one day. So we're risking less than $1 in order to make about $1.50. So the risk to reward is there. I don't like this for a long-term investment. However, I think this is setting up nicely for a swing trade. The chart is nice. We have symmetry on the chart. We can see that we're trading above that pivot. We came back and tested that pivot right there, and we held the level. We also have the 200 EMA coming in, acting as support, and I think it could ramp back up towards the $6 per share area. So that's ticker number 3, GENE, not an investment, but a swing trade. All right, guys, so the fourth and final ticker is probably going to be one of my favorites. Actually, I think AMC is my favorite. So this is going to be my second favorite. I'm going to be investing in this company long term. The ticker is TXMD. The name of the company is Therapeutics MD Inc. And there's one drug that this company makes. This is a biotech company. And there's one drug in particular that this company makes and has in market. And that's why I'm extremely bullish on this company. Let's talk about it. This company makes a birth control ring. And I know you dudes out there, you guys know that we don't need to have this conversation, that birth control is very important. I had a kid before I was ready. I wasn't married. I was 24 years old. And I got my girlfriend at the time pregnant. And I love my son. He's now 6. And I love him more than anything. But that incident has caused me to be very, very frugal when it comes to birth control. And I'm sure you guys know that using a condom isn't the funnest thing in the world, but it's better than having a kid when you're not ready to have a kid. But there's a better option for your girlfriends out there, boys and girls, and that is going to be this ring. Okay, I don't trust any girl with the pill because I don't know if they haven't taken it in a month and they're just saying they've taken it, and then later, a month later, you get a call, ring, 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 you pick up, and guess what? You got a baby on the way. But if this ring is in use, it's got like a 98% effective or 97% effective percentage. It lasts 21 days and then you replace it. You replace it after 21 days and it's like 98% effective. So it's basically better than the pill and it's always in there, so you don't have to worry if your girlfriend has taken her pill or not. There's big money in birth control and that's why I'm bringing it up. So I think this company has the potential to scale this drug, scale this birth control product, and really grow. So let's take a look at a chart and I'll tell you what I'm planning to do with this TXMD. So we're currently trading at $1.35. We do have a defined pivot at $1.25, but since I'm looking to invest in this as a long-term trade or investment, I'm going to be risking more. I'll probably be risking down towards the $1 level, and I'm going to be looking for this thing to make a move up and break over this like 250 area. So I'm looking for a lot out of this thing. I'm looking for over 100% on this TXMD, but I think it has the potential to scale that birth control drug, and I really like the outlook for this company. That's going to wrap it up. That's my top 4 penny stocks to get into right now as investments and swing trades. So I hope you guys got something from it. If you did, do me a favor. Do me a little favor and give the like button the old snake eye jab in the eyes. You guys know how we do it. The like button's not our friend, so we jab it in the eyes. Subscribe down below, hit the notification bell, and check out the 2-week free trial for the chat room and alert service. I'll catch you guys in the next video. I love all of y'all. Peace.
Drop.